It's no secret that rents are going up. In this housing market, you have to decide if you want to purchase a home or if you want to rent. And with rent going up and up and up, why are investors losing so much money when it comes to investing in real estate? Well, we're gonna jump right into that, guys. As you know, I own apartment complexes and I'm into real estate myself. And then on the business side, I finance real estate also. So I'm all into this.
Hey, this guy knows about it.
But let's talk about this, guys. I've been getting a lot of comments saying,
Orlando, what do you think about buying property right now? What do you think about investors and rents continue to rise? Should I still rent even though rent prices are going up?
and I would say to an individual, it really depends on your situation. We have been seeing news reports coming out about what's actually happening with investors. We've seen the bigger picture with these institutional investors like BlackRock, Zillow, Open Door, these guys getting into the rental market and losing their head, guys, like losing millions and millions and millions of dollars. And in this video, we are going to talk about why these guys are losing money. And if you are looking to either rent or if you're looking to get into investing in real estate, this is the video for you. And also too, buyers of just trying to buy a home, this is information that you can use to your advantage. So let's jump right into it. It says here, why investors aren't all that fond of the DC housing market. Now, why did I choose DC? DC is like one of these areas where it's a place where a lot of people live. It is very, very expensive, and a lot of people are still trying to invest in this area. I have some friends who tell me all the time,
Orlando, this area is just so expensive.
have you ever tried to buy a property in Georgetown? Imagine trying to buy a duplex in Georgetown and trying to rent that out.
I don't think you have the facilities for that, big man.
It's going to be tough. It's not a cash flow market. And I think a lot of times investors aren't going into the market that they know, like a DC or an Austin, and they're not evaluating it like they should. What are your goals when it comes to investing in real estate? If you want to become an investor, are you jumping into this market looking at it like, I want cash flow, appreciation? You want the 3 tiers, which is cash flow, appreciation, and taxes? You want all 3 of those things. Cash flow and appreciation is tough to get in one market. Are there markets like that? Yes, yes, yes. But you have to determine which one is more important to you. So this is a big thing. And DC is definitely an appreciation market. Cash flow, not so much. Investors remain formidable competitors for the housing hunters across the country. They account for 19.4% of all homes that were purchased in the second quarter. But DC Metro is not a particular favorite. In the second quarter, investors accounted for 8.1% of all sales in the DC region, second lowest behind Rhode Island. It's hard to make a profit in DC because the homes are already expensive, says Daryl. Well, Daryl, welcome to the housing market where all homes are unaffordable. That is not a surprise that housing in DC is already getting more expensive day by day by day. We already know. If you've been watching this channel, you know that that's just the way it is. If you're the 17% of people who are subscribed to this channel, listen, 82% of you guys are still slacking off and not subscribing. So please hit that subscribe button. It really does help out the channel. But listen, it's not a secret that homes are becoming more and more and more not affordable, right? And so we have been talking on this channel about what are the things you should do, and renting is one of these things. And if you are an investor, listen guys, if you are an investor or you're trying to get into rental properties, this is right up your alley, right? You have to buy right. Do I gotta say it one more time? Buy right.
Come on, man!
And this goes for anybody who's trying to get into a home. You have to buy right. Nobody wants to overpay for a home. Investors are someone who wants to live in the home. You should not be overpaid. Let's say this all together again, guys. Do not overpay. We do not want to overpay for these homes, even if you're buying it to live in it or even if you're going to rent it out. Now, we're going to talk about the reasons why this is so important, guys, especially for investors. And this is the prime reason why investors are staying away from these hot areas, or they're losing their heads, because we know a bunch of these investors have already bought and they're losing their heads. And how are they losing their heads? Well, they can't get people in the units, guys. Can you believe that? Landlords cannot get people into the units. It's crazy. It's crazy. Investors prefer markets that they see as up and coming, even still buying in some markets where prices have seen the largest pandemic era increases. Places like Phoenix and Austin and really the whole Southwest have been really attractive to investors. Florida as well. They tend to have lower priced homes so investors can buy more and spread their risk. If you are an investor, you have to buy right. There's no reason why you should be going into these markets like a DC, Austin, Miami, LA, Phoenix, any of these, Boise especially. Boise especially. You should not be going into these areas, overpaying for these houses, buying these homes for $600,000, and then get in there and say,
the only reason why I'm buying this for 600, maybe a duplex for 800 or whatever, right, is because I'm going to raise the rents to the max market.
No, don't do that.
Stop it.
That's a mistake. Let me tell you this, guys. We know that the markets have been going crazy when it comes to these rents. We've seen it. We've seen in some instances 30, 40, 50% increases in rents. But here's the thing. This is what a lot of landlords don't understand. And I feel you on the people who are renting, why this is such an issue. Rents are going up, but incomes are stagnant. Now, I know a lot of landlords would think to me and be like,
well, Orlando, well, that's not my problem. That's their problem, and I don't have to worry about that.
And I would say to you, well, it is your problem when they don't pay you your rent because they can't afford it. That's going to be the problem, is they're not going to pay you your rent. You can raise rents. You can go in there and say,
oh man, I'm going to raise rents by 40, 50% because that's the market rent.
I get it. I'm on that side too. I get it. You want to raise it to market rent. But what if, just think about this. What if you raise rents to market rents, but it's so expensive that majority of people cannot even afford it? But also here, if you do find people who can't afford it, they barely meet your income requirement. So that means that if a bump or any inconvenience, which will happen in their lives, that means that your rent is at risk of being lost or not paid or they're stuck behind. That is what we want to avoid, guys. Listen, hopefully I'm not speaking for individuals who are renting. Put in the comment section because I would love to hear what you guys' gripes are when it comes to renting. Do you have issues with it, the prices becoming too high? Are you having issues with landlords being slumlords? Or maybe you're in the camp of, I should have to pay rent to begin with. Housing is a right. Whatever your situation is, whatever you believe, I want to hear it in the comment section because I love having conversations about this. Not only as a real estate investor for myself, does it help me understand, what renters are looking for, but it also helps other people who are investors watching this video understand what you can do to make a better portfolio. Make sure that it's a win-win situation. That's what I'm all about, guys. When it comes to a real estate investor, I want to make it a win-win situation. I'm providing a place for you to stay, but I also want you to be able to afford it. If you cannot afford it and you're in my unit, we're going to have problems. You're trying to make ends meet, and I will be upset because you're not paying rent. So we don't want that, guys. An investor buyer could be an institutional buyer that owns many residential properties, or it could be an individual or family that owns just one or two rentals. There are no single reasons for choosing to buy residential real estate as an investment. Investors might buy to rent out a home. They may buy to renovate and flip the home. They may buy to just hold the home and hope that it goes up in value. Although this is not common, they may Airbnb the home. Listen, Airbnb is a total different game, guys. And we're not talking about that today, but I think I might do a video on that, about Airbnb. I've done videos on it before, so I don't know. We'll see. There's a lot of things that you can do as an investor. Investors are buying far more homes than before the pandemic. Redfin reports investor sales were up 11% the first quarter and up 5.9% a year earlier. Now let's take a look at this, guys. This Redfin chart, when you take a look at it, it says investor purchases remain elevated, far above pre-pandemic levels. Take a look at this and you see it going up and down. It's kind of like a roller coaster. But then you can see the highest point is in 2021 and 2022. You can see it's continuing to go up and up and up. Now, the reason why this is so important is a lot of you guys are going into these properties and you're buying properties at such a high rate that you are forced to make rents so impossibly unaffordable. And that's what I'm talking about when I say you have to buy right. Do you have to go and buy a property at toppity top dollar, basically overpaying for the property, and then charge someone $4,000 per month in rent and then say, wow,
Nobody's taking me up on my offer, but that's the market rent.
But let me tell you something, guys. Market rents, they're great to judge things by. But if you're looking, if you know the area, you kind of know what's renting at a high frequency and what's not. And if you are seeing that you put out a property and you put it up for $4,000 a month and there's not a bunch of applications being put down on it, then you might want to scale it back. But the problem that you have, the reason why you can't scale it back is because you overpaid for the property. And that's the point that I'm trying to make, is that when you go into these properties, you have to buy right. And if you buy right, it allows you to rent the properties at a certain price. Let's just say instead of buying it for $800,000, you bought it at $600,000. Well, now you have a span. You don't have to rent it out at $4,000. You can rent it out at $3,000, between $3,000 and $4,000.
That's a great idea. I'm with that.
Now, someone would see $3,200 when the market rent, let's just say the market rent just went up to $4,000, right? And they see 32 and they'd be like, that's a deal. And they could be a great renter. But that's what I'm saying. I'm not saying that you shouldn't get to $4,000 at some point. What I'm saying is, with a recession coming around the corner, with things going really bad in the economy, with prices dropping down, with interest rates going up, and with income being stagnant,
We have a problem.
you may want to try to get a person in the unit before you have no one ever in the unit. That's what I'm saying. So every market is different, guys. And that is the reason why we're starting to see a lot of investors slow down, because they can't compete by continuing to pay these high interest rates. They don't want to actually be in these marketplaces and have to rent properties at these ridiculously high rents. I saw a couple of places in New York and San Fran and all these other places where rents have went up 50, 60%. That is absolutely insane. And there's no reason why rent should be going up that high. And that is the reason why, like I said, guys, investors, buyers, sellers, anybody who's trying to get into any type of real estate, this is what you guys need to know when it comes to rent, when it comes to how should you place your rents. And then for people who are trying to get into the market and deciding if they're going to decide to rent or buy, just remember this: you find your place and then you're in a lease. It's a fixed amount for a year. You can come out of that lease and then reassess the market. I'm not saying stay out of the market forever. I'm just saying get into a lease for a year, see how this thing is gonna shake out, come back out of it with more information, because you should be researching the whole time you're in that lease. And then you also should be saving up the whole time you're in that lease. You're gonna come out of that lease a more well-informed buyer who hopefully has more money, and then you'll decide where you need to go from that point. That is one of the biggest pieces of advice that I can give. Now, once again, it is determined by your market. Hopefully you got value out of this content. I'm gonna need you to take a look at this video here. It will help you learn all about this crazy housing market, get into your first rental property. Also, check in the description below. We have some useful links to get into our membership program and also get a free credit report. I will see you in the next one. Thanks.